Hello, everyone. Good to have you here. As promised, we're on the 76 Research channel. I am Trish Regan. I'm joined by my colleague and co-founder at 76research.com, Rob Hordon, investor extraordinaire, really brilliant guy who has run billions of dollars for many, many years on Wall Street. And now we're lucky enough to have him here. Rob, I want to get, first of all, your take on this. Let me put this up. Polymarket, our friends over at Polymarket, they're saying, you know what? There is a 60% chance of Donald Trump, better than 60%. This is the highest he's been, chance at winning this election. Kamala Harris comes in at 39.9%. This is a prediction market, so people are putting real money to work here. They are betting on Donald Trump winning this election. I'm looking at the stock market, which has seen lots of upside recently. I'm looking at what Stan Druckenmiller, famed hedge fund guy, said today on Bloomberg, which was that, yeah, the markets are telling us something. They're telling us that Donald Trump is going to win. You know, Polymarket's one thing. When I look at all the polls, they're super close. How should an investor right now be interpreting all of the close polls? What are they telling you? Do you agree with Stan that basically this is getting baked in and people are optimistic about a Trump win?
Yeah, I do tend to agree with him on that point. And look, markets are great predictive mechanisms. They're not always right, but they really tend to be pretty good at integrating all the available information out there. And, when you look at Polymarket signaling a 60-40 favorite, we've been watching it very closely, and, you can't get too excited about 52, 53%, but now, 60-40 is really a pretty important shift. And it's not just the direct betting market odds; it's in security prices, and I think it's really propelling a lot of asset classes now. It's propelling stocks. We've mentioned Trump is probably the better outcome from a crypto or Bitcoin perspective.
Yeah, and
So
from a
Bitcoin,
regulatory standpoint, right? I mean, he's a little bit like, okay, we got lower taxes, less regulation. Wall Street likes the sound of that. I'm looking at an 0.8% gain on the day for the Dow Jones Industrial Average, S&P up 0.5 percentage point, and Nasdaq up. It had been down a little bit earlier in the day, up about 0.3%. So everybody's getting really excited about something. And I know that Kamala is very nervous, so nervous that she's, come up with this, dare I say, wacky plan to try and recruit some of the demographic that she should or thought she would have. It's not happening. So I guess, as an investor, look, we care about this because frankly, we don't love regulation and we don't love taxes. Okay, I'll just say it. There's my bias. I wear it happily on my sleeve. And I think that there's a lot of fear that the Kamala administration would be a continuation of what we've seen, but worse from the regulatory front. So, it's more of the same and kind of Elizabeth Warren-esque on steroids. Can we assume that investors are like, whew, okay, you know what? We don't have to worry about that. I mean, is that what they're telling us? Not that we don't have to worry, because we do.
Yeah, I think investors are looking for are kind of perceiving that we're going to be in a better environment. The worst case scenario would probably be the Democrats sweep all together and they control Congress plus the White House, and that's looking that the odds of that are getting pretty low. So that's kind of like the tail risk worst case scenario, and in fact, you're potentially even looking at. I don't know. I guess it's pretty unlikely, or it's viewed as somewhat unlikely that Republicans could win the House, but they're favored for the Senate. And if you have the combination of the Senate plus the White House,
it could be a pretty massive shift. I'm looking at Bitcoin today, and Bitcoin, let me bring it onto the screen for folks. If you're following Bitcoin, take a look at this. We're looking at somewhere around 68,000. Wow. Up 752% just in the past 5 years. Now, Rob, there's something that's really specific to Trump when it comes to Bitcoin. Walk us through sort of the Bitcoin story as it relates to Donald Trump.
Well, he's really increasingly open to the industry, the crypto industry, and to Bitcoin. He made the appearance at the big Bitcoin conference earlier this year. I think he's very open-minded to it. I think a lot of the people who are part of his campaign or who will be part of his administration are, coming from kind of the venture capital background and the technology background, have probably had some influence on him, because I think, several years ago, he was more skeptical of it. But I think a lot of people actually have really changed their tune and kind of evolved their perspective on Bitcoin specifically as they've gotten to learn more about it. And, as it becomes more of a kind of an inevitability globally, like it's almost beyond the control of government to stop it, or any single government to stop it, because it's a global asset class, a global phenomenon. I think you see more of an idea of like, well, if you can't fight it, join it, or the idea of kind of leveraging crypto and the growth of this industry similar to AI, and taking advantage of it and making sure that the US, is kind of aligned with it or benefits from it, or the regulation works for us, rather than make it into an enemy.
Yeah. I want to go to a quick clip here. We have Donald Trump becoming the first president to make any kind of payment actually in Bitcoin. This was live in New York.
You're just going to scan this QR code here with this phone if you want to take that from them. Sure, yes, go ahead. Scan that QR code right here. Take pictures. Right there. Right there. Just that one. Slight technical difficulty.
All right. And fantastic, it went through.
So he's embracing technology, and this is kind of,
All right, we're done.
Perfect.
The first transaction by a president on the Bitcoin protocol. History.
You know what that means? That's history. History of the making. Hello, everybody. I got to go back and see those people.
All right, let's go.
Come on.
Right this way.
Thank you.
oh my gosh.
Thank you, everybody.
Sir, what's the reaction to the Fed cutting interest rates today?
I guess it shows the economy is very bad.
So that was from a couple of weeks ago, and Donald Trump, they're making an appearance at a Bitcoin sort of, dare I say, rally. It's a Bitcoin bar. They're taking Bitcoin as a means of transaction. But listen, I think in some ways it's more than that. It's more, I mean, how would you describe, I don't necessarily see it as a transactional sort of currency in the same kind of way as I do see it as like a store of value. Is that a fair characterization? Curious on your thoughts on it too, because I look at other versions of blockchain, and I look at Ethereum, for example, which, we were just talking about Polymarket. That's actually how they settle their trades on the Ethereum blockchain. So as we think about the derivatives market, the futures market moving forward, it's entirely possible that things like Ethereum might be used to try and settle some of those contracts and those trades. But Bitcoin's blockchain is a little bit different. Walk me through sort of how you think about the difference between the two.
Yeah, I think Bitcoin is
And I like
setting
both, by
up.
the way.
Well, and in addition to Ethereum and to some of these other emerging digital currencies, there are also all of these kind of networks that are kind of built upon the different layers. So you could have Bitcoin, really being used as like a store of value for larger transactions, and then you have kind of technology that's built upon it. Even our existing digital payments infrastructures like the Visa and MasterCards could evolve to where they're sort of processing these like small micro transactions, but off of a base of Bitcoin as the base currency. So no, I think you're right though. Bitcoin's not really designed so much for millions and millions of high volume small transactions. It's more to provide a stable store of value, and perhaps for larger secure transactions.
I here on this channel and also on the Trish Regan show, we've got Michael Saylor coming on next week, actually next Thursday, so almost a week from today. Michael Saylor, for those of you that don't know, I mean, he's sort of like the Bitcoin god, right? Because he made a big bet on Bitcoin back in the summer of 2020. And he really saw it as a store of value and continues to see it as the most efficient store of value. Rob and I are fortunate because we heard him speak actually recently in New York City at a conference. I introduced him, and listen, I've been fascinated by this space forever. I remember when it was $10. I remember being in a bar. It was called EVR, a bar in New York City some, 12 years ago when they took the very first transaction. So Donald Trump is the first president to transact in Bitcoin. I was there the very first time they actually had a Bitcoin transaction. So, we share that in common. Look, I'm fascinated by it, and I think it is very much part of the future. And it's not necessarily like, this or gold or this. I actually like them both. I know you do too. But I think that as we move forward, it's going to become an increasingly attractive, albeit still volatile space, which is why it's somewhat hard to be like, okay, this is my pure store of value. If it is, you got to be willing to weather the ups and downs in a really kind of wild way.
Yeah. Yeah, there's certainly risk, and I think there's a lot to the symbolism of Trump being in that bar, because it shows, it's not just kind of a cute campaign pit stop. It's really kind of signaling that Bitcoin is becoming a variable in our elections and in our politics. And that's very important, because really what we need to see with Bitcoin, and we're kind of seeing it with the ETFs, and for Bitcoin to really thrive, it needs to be more broadly adopted. And for it to be more broadly adopted, it needs kind of political and regulatory support. And we're seeing it's really getting it, because actually the people, the voters, own Bitcoin. And even Kamala Harris kind of had a nod to that with her little her
that's
plan.
very true. I should mention that, because Kamala came out with her sort of opportunity plan and the opportunity agenda for specifically Black men, which is a little something. She says she's going to be the president for all people, but came up with how do they call it? A fully forgivable loan. That's a new one. Like that, we're doing some mental gymnastics. I actually said on the air earlier today, I was like, the non-forgivable loan, which was a complete screw up on my part, because, intuitively you want to say it's a non-forgivable loan, but no. This one is fully forgivable, ladies and gentlemen, a fully forgivable loan that Kamala Harris would want to put in. So this was one of the sort of main tenets of her policy, basically a cash handout to any Black man.
Yeah. The only time
$20K.
I've heard of some people negotiating that with like Wall Street pay packages or something, right? Where it's sort of like some kind of tax avoidance scenario. I mean, maybe that was.
If anything, you want to probably like legislate against that kind of stuff. Like, you're trying to use semantics and fancy words anyway for a handout, or in the case of Wall Street, it's basically part of your salary, I guess. Anyway, so in addition to that, Kamala Harris has come through with a plan to protect Black men in the crypto market. And we can have a whole other conversation. I mean, it's just sort of funny, because she's like, I'm going to give you $20K and I'm going to protect you in the crypto market, because, be careful of the crypto markets. And, by the way, I'm going to totally legalize MJ. And I'm like, I'm trying to be careful, because we're on YouTube and I don't know what words I can say or not say. So we're going to go with the abbreviation. Okay, guys. Anyway, or cannabis. I don't even know if I can say that. So I'm going to be very, very careful. But she's saying it. I thought it was legalized. I mean, every time I walk down the street in New York City, I'm like, God help me. It stinks. It's like I'm out in the forest. Anyway, I thought it was legal. Apparently it's not. It's not federally legal. So she's going to do some work on that. But what do you make of her trying to creep crypto into her economic opportunity plan for Black men?
Yeah, I think it does point to a reality that actually I've looked at some data. So crypto ownership, like Bitcoin ownership, really does skew young. Like people who are, I think it's fair to say we're both Gen X generation. And, and then there's the boomers. Like the boomers really don't own much. They're very distrustful of it and skeptical. And
like my parents aren't going near it.
Sorry?
My parents aren't going near it.
Yeah. They think it's, it's just a bunch of ones and zeros. How could it have value? And, even our generation,
I had to convince them to get into gold. Anyway, whole other story. Keep going.
people, but the millennials and the younger groups, they're all in, and so the ownership skews towards them. And actually, I've seen some data. It skews towards certain minority groups as well. Like it's kind of skews a little male. It skews a little bit towards minority groups. So there's something to what she's to the
I didn't even
the
realize
policy
that
she's trying to
actually. Like
address
I'm
it.
pretty colorblind on stuff, so like I didn't even realize that. But that's interesting.
Well, I
I mean,
just
she
looking at
realized
like
it.
kind of these survey data or whatever.
But here's the thing: what is she protecting them from? Like, let me be very clear. By the way, if you're looking at Bitcoin, like you don't put your savings in Bitcoin. This is like, you get a little money on the side. You could go to Vegas or you could put it in Bitcoin. Okay. I mean, I do think it's an interesting place to be. I do actually believe in it. But I'm not putting all my assets in it. Like, you wouldn't do that with any asset class, by the way. But I say this just, because, for the kids out there watching, and for the older kids out there watching, you want to be careful. It's definitely more of a Wild West asset class. All that said, we know that. Like, and when you try and buy it in any of these ETFs, there's a big message that pops up on the screen saying, this is a crazy market. And beware, there's tons of volatility. I mean, hey, the volatility in some cases can be your friend. And I know you get a piece coming out on that from a tax purposes standpoint. You want to use volatility in very, very specific ways. But, we know that. So what is Kamala going to do? She's going to regulate it more? I mean, it's going mainstream. It's in the ETF community. You get BlackRock involved.
Yeah, it's unclear. And I was kind of going through the AI search engines to try to figure out if she had actually said anything concrete beyond that one statement about protecting them from digital assets. I think it was just kind of throwing out a talking point that was sort of trying to present herself as being a pro crypto candidate, similar to how Trump did that, copying Trump again in his approach and his policies and his strategies. But then it was like also stated as a form of protection, because I think that's where a lot of the Democrats still are, where it's sort of like this consumer protection mindset. So maybe they're trying to have it both ways and just give vague.
Perhaps. Yeah. No, she's trying to, look, I care about you. I'm trying. I think, and Don, one of our loyal viewers on the Trish Regan show, and now Don's over here at 76 Research. We thank you for that. Don's not buying it. He likes his Swiss francs more than his crypto any day of the week. He likes his gold. I'm not saying it's either or. I think this is just this is a little bit of insurance, just in case. Coming from somebody who should have bought it when it was $10, guys, okay? Remember that. And then when it was 30,000. Anyway, it's gotten easier to do now, and you can buy it in ETFs at fractional ownership, et cetera. So they've made it more user friendly. I think back when it was $10, I was like, I got to get a hard wallet. What's a hard wallet? Like it was too intimidating from a technology standpoint for someone who could barely work a computer. So, oh well. But Don is also making the point on Kamala that he's concerned her, idea of giving out $20K to every black man is not constitutional. Don, I would think you're right on that. Rob, you're an investor, you're not a lawyer, but if you were to start doing this along with the whole student loan forgiveness thing, aren't we sort of getting into dangerous territory? Like if we want to think about sort of socialism, communism, and economic systems that we fundamentally don't believe in as Americans?
Yeah, well, look, say what you will about the communists. I don't recall them dividing up the proletariat into racial and identity groups and then divvying up the resources of society even more.
So she's taking it a step further.
Yeah, she's taking it like a step. It's like not only is she a communist, but she adds in this kind of woke, postmodern, critical race theory lens to communist reapportionment of the resources of society. To me, it's very dangerous and toxic. I mean, what's next? Are we going to have race and gender-based tax rates? Right? I mean, that's the logical conclusion.
I mean, but it's a form of, I guess this is, a forgivable loan is a fancy way of saying reparation.
Yeah. And I think it's you can't just give them the cash. There has to be a few of kind of obfuscation in order to make it not seem like what it actually is. And maybe that way it becomes potentially, they think they can squeak by with it and it's legal. Or maybe they just know it's illegal, like the student loans, and they're making a campaign
they're just
promise.
going to do it because you know what? She's really getting killed in the polls, right? So we need to go back to Polymarket. This lady is really, really, really suffering, and she's trying to stop the bleeding. I mean, I don't know if she can. I mean, I would point out that she had been kind of close to this territory. I mean, it wasn't quite this, but she was not doing so well ahead of the debate, and she did manage to salvage herself. So, it's, anything could happen. They talk about an October surprise. We're in mid-October, so I'm waiting. I'm not sure what that one is. But I do think that it comes back to it's the economy stupid. ABC News admitted this much on Sunday.
Some 59% of Americans say they believe the economy is getting worse, compared to just 23% who say it's getting better, with more Americans trusting Trump to handle the economy if he wins a second term.
Yeah. Okay. So again, I'm here with Rob Hordon, and I want to bring him in to get his reaction to that. What do you think? It is the economy?
Yeah, it's the economy. It's always the economy, or it's usually 90% economy with every election. And look, inflation, 20% or so inflation over a 4-year period, that really hurts the working and middle class very hard. And it's not something like unemployment. If you could have a recession and then you lose your job, but then you get another job, it kind of gets repaired. But that degradation of your purchasing power, 20%, that's
pretty
permanent.
Painful. I mean, yeah, Donald Trump revised the graphic. I should put it up here and we can see. He revised the graphic the other day after CPI came out, and he put this out, and I'm looking at it. I'm like, here you go. This is the whole story. Ladies and gentlemen, when you have car insurance upwards of an increase of 57%, you get kids at school that see their increase in cost for food. I don't know. They were paying more for cafeteria workers. I don't know I guess it's also the cost of food, right? And getting the food from point A to point B. The cost of K through 12 food is up 70%. I'm like, this is not that hard. I think Americans are super forgiving. I mean, they elected Joe Biden, for goodness sakes, right? And he was not necessarily any spring chicken way back when. He's obviously deteriorated, but they'd be willing to forgive her the uppity personality, the lack of credentials. Would be forgiving a lot if, in fact, the economy was doing great. But the economy's not doing great. Stock market's doing great, but there's a big sort of divide, if you would. And that's why I keep saying to everybody, you know what? Invest. Let us help you with the 76 research report. You've got to invest, because if you don't, your dollars are just going to keep crumbling away. They're going to keep printing money. And guess what? Somebody's going to do well. Somebody's going to do really well. And it's not going to be you. It's not going to be the middle class.
And I would say when you think about the performance of the stock market, the inflation contributed to that, because, they printed all this money basically, and it flowed through the economy, and then it kind of flowed through in terms of helping corporate profits and helping money flow into the stock market. But on the other hand, though, the stock market's driven by things that are unrelated to policy, and we're in the middle of an amazing technological boom or revolution, and so much of the market is to that. So stocks are doing well because we've got some underlying things in the global economy or the American economy that are very favorable and very exciting. So, it's the combination of the two.
Yeah, it is. And I think that you've got a Fed that's going to continue printing for the foreseeable future. You've got all this happening all around the world, right? Like, we're not living in a vacuum. You get the ECB out there doing the same thing. And we haven't even dealt with the inflation that we have. So ultimately, where is this heading? I think actually whoever wins, and I think Donald Trump would at least try to rein in some of the spending, but I think whoever wins, we're going to be looking at more of the same, 35 trillion and counting, which may contribute to also what we're seeing in terms of gold prices right now. Rob, I want to show you a chart. Gold actually today, this isn't a chart. This is actually just a headline actually out of Reuters. So this is Reuters pointing out that the 10-year note yields had slipped to a week low, and this is causing people to go more increasingly into gold. We saw gold trading today somewhere around, I want to say 20, like somewhere around $2,700 an ounce spot gold. And the expectation amongst those pulled in the industry is that it's going to go to 29.41 sometime over the next 12 months. You and I are both pretty hot on gold. We both like it. I know that you actually even recently bought some more. I should disclose that I as well. I just think it's one of those ways that I hedge inflation. And I know we talk about it in the basic income builder at 76 Research. And if you're interested in getting that portfolio, I encourage you to do so. But, you know, if you're living in an environment where you've got central banks around the world continuing to print, gold's part of the answer, I would think, to trying to preserve some of your purchasing power.
Yeah, I mean, gold and Bitcoin are kind of part of the same story where people are looking for hard money kind of solutions, these supply constrained stores of value. And I think it's a global phenomenon. You know, we've talked a lot about what's going on internationally and with the various central banks around the world. They've increasingly lost interest in US dollar assets, whether it's, you know, like treasuries, right? Because not just because of our budget problems and our sort of long-term debt issues, which do not appear to be getting resolved, or there doesn't really appear to be tremendous urgency to get those resolved by either candidate. Frankly, there's not tremendous attention to that, but also kind of in the wake of the whole, you know, crackdown and sort of economic policies of post-Ukraine and the vulnerability that sanctions or asset seizures, you know, represent. So gold is a very, you know, there are a lot of reasons why individuals and governments around the world are going to be incremental buyers of gold, and that's driving demand. You know, I think more recently, the strength of gold, like very lately, you could kind of attribute it to a little bit of a mismatch, because right now we're in a scenario where, you know, Trump is potentially this kind of going to bring in, if he wins, he's going to bring in a kind of a growthier scenario in a more robust economic scenario. But this is kind of on the heels of the Fed now flipping to kind of rate cut mode.
Mm-hmm.
And you kind of see that with the 10-year treasury going up towards 4% from a low of around 3.5%. So, you know, it's like a little bit more of like an inflationary dynamic now that Trump does appear to be ahead. And I think that's helping.
You know, let me, you know, and again, it's not an either or scenario, but it's just interesting to look at this because this is a chart that has both gold and Bitcoin in the maroon red color, gold in green. And you can see one is far more volatile than the other. So it's not acting entirely like a store of value just yet, which I think is where the Michael Saylors of the world would really like to and believe it is heading. But gold really kind of is, right? If you look at gold, and by the way, we've looked at gold together vis-a-vis the amount of money in the money supply right now. And one of the things I find so fascinating is that it's really tracking in a way that it didn't, say, back in the year, I don't know, 2000, was it 2007, 2008, when you started to see it get kind of out of whack? Now it's actually, it seems to
it really ran up in dollar terms. Yeah. Going through 2011 after the financial crisis, people really got very aggressive about gold, and it led to a correction. But even over that long, you know, kind of that longer time frame, you've had this sort of, you know, you smooth it out in that little kind of mini bubble. You have, you know, like nice, very, very strong returns for gold investors over the last 20 years, almost at the level of, you know, the S&P 500.
Wow.
So it's been an impressive run. And yeah, I think, look, like in terms of comparing it to Bitcoin, it's you know, Bitcoin's a much more volatile and uncertain asset class, an emerging asset class. I don't think you have anywhere near the kind of potential upside in gold as you do in Bitcoin. No one's going around like Michael Saylor.
You don't have the
saying,
maybe potential downside, but go ahead. Yeah, no one's going around like Michael Saylor, except for, I don't know, maybe Ron Paul.
Well, it's almost like for gold to go up to, you know, because gold is so much of a larger asset class than Bitcoin. Like it can't grow to the levels that, right? Like at that pace, it would be like gold would just take over the whole, you know, kind of all the financial assets in the world. And that's sort of inconceivable. But I don't think that's necessary to justify an investment in gold. When you think about gold, you want to have that kind of participation in kind of protect yourself from money creation and have that participation in general wealth creation, and also have an asset that tends to perform well in scenarios where stocks do not perform well. So in kind of more kind of geopolitical crisis, financial crisis kind of scenarios.
I was just putting our model portfolio performance up. Congrats to us, 3 months ending at the end of November. And it's been quite a run. You can see the top consumer pick up 25%, top financial picks up 24%, real estate up 23%. Really a wonderful success story. And I encourage people to get all three of the model portfolios. Actually, you can get what's called Founders Club there at 76research.com. But if you think about interest rates right now, and I'm going to add Don to this conversation because he worries that these high interest rates, and they are still relatively high, but they're moving lower. They're moving lower. I'm telling you, Donna, as we speak, that they're kind of crushing a huge chunk of businesses. And so if we start to see interest rates move down, and that's the expectation, obviously, given the rate cutting environment we're in, well, then what do you know? You actually start to see a lift to the economy. And so I think that's sort of the bet here, right? For a lot of investors, that we're heading into an upward trajectory. And I'll tell you what, I will say this, because I criticize the Fed all the time, and I'm never going to stop criticizing the Fed. I really don't like the Fed, and I think they always get it wrong. But like this time, dare I say, they may have avoided, like, is this the soft landing scenario that everybody was dreaming of? Because if you actually start to see some lift, to Don's point, if we've got lower interest rates and it starts helping those businesses, Trump comes into office, less regulation, less in the way of taxes. I mean, you could have a real economic panacea outside of the fact that we still have all this debt.
Yeah, no, I mean, the market's certainly kind of pricing in this soft landing scenario, and there's evidence that we're looking at some disinflationary data coming through. Mm-hmm. So yeah, that's part of the story here. So, it's a favorable setup, right? If you have, a new president coming in who's pro-business and anti-regulation, and perhaps even can help the geopolitical issues of the world get a little more favorable. Mm-hmm. And then you do have kind of a falling interest rate situation, and you've got a technological revolution underway that's going to drive a lot of upside across a lot of businesses. It's setting up, you could see why someone would be inclined to be invested right now as opposed to sitting on the sidelines in cash.
Sure. I want to get over to some other interesting sound that we have that's pretty relevant this week. Donald Trump was with my former employer there, Bloomberg, and he was speaking at the Economic Club of Chicago and sat down with the Bloomberg News editor-in-chief, who is quite British. Anyway, nothing against the Brits, okay? Anyway, it's just sort of funny to see the contrast between the two guys. And they kind of get into it over tariffs. And so I want to play this for you, get your reaction. Howard Lutnick, you remember him from Cantor Fitzgerald, everybody, became quite known, unfortunately, after 9/11. But anyway, he was on CNBC this morning defending Trump. But let's listen to this exchange, which was quite wild.
You're also talking about 10-20% tariffs on the rest of the world. That is going to have a serious effect on the overall economy. And yes, you're going to find some people who will gain from individual tariffs. The overall effect could be massive in terms of the economy.
I agree it's going to have a massive effect, positive effect. It's going to be a positive, not a negative.
Well,
let me just tell you. I know how committed you are to this, and it must be hard for you to, spend 25 years talking about tariffs as being negative, and then have somebody explain to you that you're totally wrong. It'll have a negative. It will have. I'll go a step further.
40
if
million,
you don't
40
do
million,
this,
President
this
Trump,
country has no
40
chance.
million jobs is a lot of jobs to rely on.
They're all coming back.
Those are 40 million jobs. Those are 40 million jobs in America that rely on trade.
Are you ready? John Deere, great company. They announced about a year ago they're going to build big plants outside of the United States, right? They're going to build them in Mexico.
And you threatened them with tariffs and they stopped.
That's right. I said, if John Deere builds those plants and not selling anything into the United States, they just announced yesterday they're probably not going to build the plants, okay? I kept the jobs here.
Yeah. Oopsie daisy. I think that was, that's Trump buying Bitcoin, which we were talking about earlier. I think, his point there is a really, really, really fascinating one. Just a reminder to subscribe to the channel and to go over to 76 Research. You can get so much information there, including so much information for free. I'm here with Rob Hordon, my colleague there at 76. And we've had, he's a really, really, really well-known investor and has managed billions of dollars for many, many years. And we are lucky to have him at 76. I'm lucky to know him. He's a longtime friend. But let me ask you, Rob, when you hear Trump get sort of criticized on the tariff front, I think it's fair to say, we're all thinking about this stuff a bit differently than we had in the past, right? There was kind of a traditional school of thought that's been turned on its head in part because of him.
Yeah, it's really actually kind of emerged as a fascinating conversation topic or economic subject that's sort of been in the background for a long time, but he's brought it back. I think he's getting picked on a lot because of the tariff policy, because they want to depict him as being an anti-private sector guy or an anti-free trade guy, and they're kind of making a bigger deal about it than it really is. I was taking a look. I mean, the manufacturing sector alone is, it's something like 12, 13% of our economy, in line, just slightly larger than tourism as an industry. So I think there's one misconception is just how important manufacturing actually is in the context of the US economy. So if you think about even, applying some tariffs to different countries on manufactured goods, there's kind of a limit to how much impact that could actually have. But I think just taking a step further back, it's not, we have to get away from these kind of academic theoretical models about free trade, because yes, the concept of comparative advantage, you want all of these countries, to specialize in the things they're good at. It's a very true theoretical concept. You want LeBron James playing basketball, and you want Trish Regan, doing podcasts and right.
Thank you.
Yeah. And I'm trying, I don't know what other example, you want, the professional chefs cooking, right? That's the concept of comparative advantage. But it doesn't quite, there are drawbacks to it, and there are kind of flaws to that theoretical model. And I look at it where if we really go down that path, that's a potential path where the US really deindustrializes, because our advantages are in the service sectors. It's in financial services, technology, entertainment industry. You think about the things that the United States is good at, and we still need to make stuff. For our own health of our own economy, for our own national security, we need to kind of preserve an industrial base, and I think we need to be thoughtful about that. And tariffs are actually kind of an interesting mechanism to protect our industrial base, not just for jobs, but to kind of make sure that the US economy stays diversified, that we are able to make stuff. And it's particularly important in the context of China. And we learned this during the pandemic. We do not want to rely on China for all of our physical goods.
No, for anything. I mean, you couldn't get Lysol. I remember this because, or Clorox wipes. It turns out, it's made here sort of in the US, but the chemicals were being shipped from China, and they couldn't get the chemicals from China. So therefore the company couldn't operate and make the stuff. And it's this isn't smart, for goodness sakes. I mean, this is kind of basic. And I think that was a wake-up call. In the spirit of nationalism, in that you want to be independent, and when push comes to shove, and you get that rainy day, which which turned into a year and then some, you need to be able to cover yourselves. Here's another soundbite here of Donald Trump speaking with the very British Bloomberg reporter.
You're also talking about 20% tariffs on the rest of the world. That is going to have a serious effect on the overall economy. And yes, you're going to find some people who will gain from individual tariffs. The overall effect could be massive in terms of the economy.
I agree it's going to have a massive effect, positive effect. It's going to be a positive, not a negative.
Well,
let me just I know how committed you are to this, and it must be hard for you to spend 25 years talking about tariffs as being negative, and then have somebody explain to you that you're totally wrong. It'll have a negative. It will have I'll go a step further.
40
if
million,
you don't
40
do
million,
this,
President
this
Trump,
country
40
has
million,
no
40
chance.
million jobs is a lot of jobs to rely on
They're
trade.
all coming back.
Okay, forgive me. I think we did actually play that one. There's a couple different sound bites that I really did enjoy from that exchange. But, it's really something to see this kind of discussion. I'm not so sure that Kamala Harris, frankly, would be able to hold her own there and have that conversation. Very interestingly, I should point out, Rob, at the start of that whole program, he got up in front of the whole room and he said, hey, you know what? Bloomberg invited, the Economic Club of Chicago invited Kamala Harris to have a similar conversation, and she refused. She's also incidentally refused Time Magazine, and she has refused, I think, what's his name from Salesforce? Mark was tweeting that out today. I was like, wow. Mark Benioff over there. I mean, she's kind of losing the tech crowd, and then she's not willing to sit down with the Economic Club of Chicago and answer tough questions. So she's dissing Bloomberg, she's dissing Time. No one in tech really seems to like her right now, which is fascinating to me because so many of them were big time libs. And now they're like, I don't think so. What's going on?
Yeah, or at least maybe a lot of the tech people who are kind of more aligned with Trump's view are speaking out and feel more emboldened. And I actually think that's just sort of more of a broad-based observation that, you rewind a year or two ago, everyone felt so squelched and so inhibited in terms of what they could say, or can they say, oh, I agree with Trump on this or that. And now I think, it's kind of delightful to see that actually Americans are back to speaking their minds and sharing their actual views. And so I think that's kind of, part of it. But in terms of Kamala, I mean, she's in a bind because on the one hand, if she hides, she's not going to get any support. But on the other hand, if she does participate in these events, her ignorance is exposed. And okay, for the first interview, you can say, I was from a middle-class family and, I believe in the opportunity economy and, right. I mean, but those platitudes wear thin, and to kind of, maybe the Bloomberg guy disagreed with Trump on the narrow issue of tariffs, but at least he's able to go back and forth with him.
Yeah, that's for sure. I mean, I loved it. I think it's really important to have these real conversations, and I don't think she could go back and forth at all. I think they know that, and so that's why they're not putting her out there. I want to shift gears. Nvidia is a stock we've talked about a lot. We actually don't have it in the American Resilience portfolio, which is our growth portfolio at 76 Research. We have some plays on Nvidia, but we still love Nvidia. It's just that it's pretty steep these days. Here's a clip of the founder talking about the future of Nvidia.
I'm hoping that Nvidia someday will be a 50,000 employee company with 100 million, AI assistants.
Wow.
And they're in every single group.
All right.
We will have a whole directory of AIs that are just generally good at doing things. We'll also have, our inbox is going to full of directories of AIs that we work with that we know are really, really good, specialized at our skill. And so AIs will recruit other AIs to solve problems.
Right.
AIs will be in, Slack channels with each other.
And with humans.
Right, and with humans. And so we'll just be one large, employee base, if you will. Some of them are digital and AI, some of them are biological. And I'm hoping some of them even megatronics.
Wow, okay. Like, what does that mean, right? What's your take? I mean, we're moving towards AI, and I think that the sooner people recognize that and prepare for that, the better. I am a big believer in Web 3.0. I think that the changes are phenomenal. You and I have talked about some of it right here on this channel. The future is now, and it's coming, and it's going to be, like the things that we're going to see in our lifetime are just going to be mind-blowing. I think absolutely mind-blowing. And, Optimus is one. We can talk about that later. I'm just waiting for it to be able to make my dinner and make my bed, and then I'm all in. But like these changes are happening. They're swift. What's your take on Nvidia and what its potential is? I mean, we're looking in the market, and it's done pretty well, especially vis-a-vis some of the other players in that space.
Yeah, Nvidia, fascinating story, and it's basically more or less back to its all-time highs after a little bit of a a downdraft. In our model portfolios, we don't have Nvidia. We don't actually have any of the Mag 7 stocks. And part of that's just deliberate in that, we want to give investors some alternatives because I think most people, Nvidia is 6% or so of the S&P 500.
Yeah.
A lot of people have that exposure.
Yeah. And by the way, I should just say that's an important sort of note because your point is a good one. In other words, and I have our graphic for our website kind of covering some of this stuff up, but the whole goal of this is to provide you something that's different. Too many financial advisors are, okay, we're going to put you in this, that, and they're charging all this money to put you in this and that. And then if you look at it, it's exactly the same as the S&P or all these funds. It cracks me up. Like some of these funds, I'm like, guys, like it's the S&P for goodness sakes. And that's really, this is value here because you're getting picks there. You can go invest in the S&P index. I encourage people to do that. But what we're trying to do is something a little bit different. And so you can see, I've got sort of a proof of performance chart here for the 3 months ending 9/30/2024. And you've got consumer financials, utilities, real estate technology, real estate materials, financials, consumer. These are the sectors that we're in. And you can see the median stock price up 10.8% versus the S&P 500 index up 5.9% in that time. So I'm not dissing the S&P. I think that people need to be in it. I encourage you to be in it. But I do think that, if you're going to pay for some research, you ought to be able to get something that's a little bit outside of, this is one of the income builder portfolios, outside the box.
Yeah. So I think we really conceive of these model portfolios as being like a nice complement to a holding like an S&P 500 index fund. Yeah. Which people would really tend to have. But, when you think about Jensen Huang and that clip, you really got to listen to that guy because, if there's someone who knows what's happening in technology and the underlying economy, it's him. And what he was really talking about is, what they call agentic AI, which is, the machines they become like workers, right? And they think independently and act independently. And he's describing a scenario where, you go to the office, I guess maybe we want to go to the office, your virtual office, and you're going to be like interacting with bots. You're going to be interacting with AI agents, just as if they were people, like almost to the point where you won't differentiate between people and AIs. Now,
weird.
It's weird, but it's happening. And like, it's, we wrote about it in the 76 report recently. Vinod Khosla is another big-time Silicon Valley entrepreneur, the founder of Sun Microsystems, and he was in an article recently in the Wall Street Journal talking about his expectation about AI being a massively disinflationary force, potentially leading to 5% real like GDP growth rates in the U.S. and a lot of job losses. And this time, it's not really, over the last few decades, we've seen the impacts of technology and NAFTA on the Midwest and the industrial base. This time it's coming for the service sector, which is, 80+% of workers in the private sector. So, now this is good and bad. This is a potential solution to real GDP growth and real productivity growth. That's what you want. And that's great for investors. On the other hand, there are going to be losers in this. That obviously people who lose their jobs, but that's going to create a lot of slack in the labor market. And it's going to be disinflationary. And then there's going to be companies that potentially get disrupted and destroyed by, these efficiencies that are potentially going to come through. So I think that's really,
as you invest, one, you got to be invested in this stuff because if you're one of the casualties, you at least want to, have some skin in the game of what's working. And then I think in terms of the other companies out there, you just have to be really, really selective. It even sometimes makes me nervous because I look at the S&P and sure, you get Mag 7, but there's going to be winners and losers, I suspect, even within the Mag 7. Look at Intel. Intel used to be rip roaring and look what's happened at that company. Nvidia used to be a little nothing. And now it's so commandeering and its valuation is so rich. And so I think you just have to be thoughtful and sensible about what you're doing in this environment.
Yeah, essentially Nvidia destroyed Intel. Intel's still alive, but that was, those we talked about the other day, those GPUs kind of beating the CPUs. Interesting footnote on Intel, I guess Qualcomm today saying they're going to wait to see who wins in November before deciding what they want to do with respect to potentially acquiring all or some of Intel's assets, which I find interesting, and it makes sense because the antitrust outlook is going to be, different, and the international trade outlook. So that'll be an interesting development. But you want to be diversified because it's hard to predict who's going to win or lose. But you want to go through the effort of saying, hey, look, if I'm going to buy a stock, I want to be on the right side of this trend. Right. I don't want to be disrupted and dismantled by AI. I want to benefit from AI.
Absolutely.
And I think tying it back a little bit, my thoughts, how this all interplays with like gold and Bitcoin.
Yeah.
If there is a lot, this is a little bit of a paradox, because if there is a lot of disinflation and that kind of pressure on the economy, I think what's logically going to happen is that's going, and that translates into job losses. We're going to see more of what we just saw, with the Fed recently, which is that, kind of easing monetary policy, printing more money to spur the job market and to kind of counteract the disinflation, because we need inflation in our economy. We have way too much debt to allow for actual deflation in our economy. So you'll see even more monetary debasement potentially to counteract. And there I see hard assets, real assets like gold, potentially Bitcoin, but other real assets, like a lot of the kind of underlying assets that underpin our holdings in the model portfolios. Yeah. You see those kind of appreciating in real terms, but also in nominal terms. So if there is a disinflationary wave from all this AI and this big productivity boom, you really want to own real assets as a counterweight to how monetary policy is going to react to that.
It's a really good point. People can read more, learn more, get the model portfolios. You can subscribe for as cheap as, guys, $1 a month. If you use code word $, go to 76research.com. Get the 76 report. There's a wealth of information. You can cancel anytime. And you know what? It's only $1. All right. So first 2 months are $1. Then it goes to $9.95, $9.95. If you want to add on one of the model portfolios, I don't have the exact numbers in front of me, but I think it works out to like an extra $22 or so a month. So look, this is all about you taking care of you. We're here to provide you some guidance on how we see the world right now. And based on our expertise and my having covered markets for 20 some odd years, and Rob having been on Wall Street and been trading and running money for 20 some odd years. So this is a chance to really bring that knowledge to you guys and for you guys to be able to take that and run with it however you may. So sign up at 76research.com. Use code word $. Our gift to you. Go and look at those model portfolios. There's 3 of them there. You can get the whole Founders Club, the whole kit and caboodle for the cheapest. I think that's the best value for sure. So go do that. And Rob and I will be back here. Sign up for the channel. Get the alerts. Know when we're live. Make sure that you sign up, because we're going to have little bits and pieces of content coming out every single day for you. So here at 76 Research, and we'll see you next time.